Hello, everyone, and welcome to today's webinar, Election Year Compliance Tips for Nonprofit Organizations, Avoiding Legal Compliance Missteps. Before we get started, I would like to go over a few items so you know how to participate in today's event. You have joined the presentation in listen-only mode using your computer's speaker system by default. If you would prefer to join over the telephone, just select Telephone in the audio pane and the dial-in information will be displayed. As a reminder, all attendees are in listen-only mode. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the presentation. We will collect these and address them throughout the course of the presentation. Today's webinar is being recorded. The information contained in this presentation is provided for general informational purposes only and is not intended to serve as legal advice. A copy of the audio recording and slide deck will be emailed to you within 72 hours of the completion of this live presentation. Today's webinar will be presented by Lisa Brauner, based in our New York City office, and Jim Kahl and Kevin Serafino, both based in our Washington, D.C. office. To kick off today's program, I would now like to pass over the presentation to Jim. Jim, the floor is yours.
Thank you very much, Rachel, and welcome everybody to our webinar on nonprofit political activity. Our goal today is going to be to focus on some of the major issues related to nonprofit activity. We couldn't conceivably cover all the issues that would exist covering this topic, but we're going to try to focus in on key issues to help you avoid missteps in this area. We have about 50 minutes of prepared material. Please, we welcome your questions and we look forward to answering them. The topics we're going to be covering are on the screen in front of you right now. We're going to start with a review of the political activity rules that apply to associations and advocacy organizations and professional societies, the C4s and the C6s of the world. I'll start with that part of the presentation. And then I'll move it over to Lisa, who will be talking about the political activity rules for 501c3s and the political activity rules that apply to employees in your organizations, regardless of the kind of nonprofit that you are. And finally, Kevin will cover the lobbying activity rules, both tax rules as well as the Lobbying Disclosure Act. And we'll conclude with a few takeaways in this area. Now, we can move to the next screen. I always think it's important for this kind of conversation of political activity to have a couple of overarching reviews before we go into the depth in the various areas. Whenever we're dealing with political law activity, it's important to know that the same activities can involve many different laws. It can involve federal, state, and local laws, depending on which public officials may be invited to an event. In addition, the same activities can involve tax laws, lobbying laws, campaign finance laws, as well as ethics rules. You also need to keep in mind that people watch what we are doing in this space. Prosecutors, media, and watchdog groups watch and monitor public filings in this area, and prosecutors like to go after political law violations. The media likes to cover them. They get clicks, they get views, which is to say that in addition to the legal liabilities that may exist out there, there's also reputational concerns that you need to keep in mind. But the takeaway here should not be to stay away from this activity. Rather, the takeaway is to understand the rules, because there are many opportunities within those rules for your organizations to achieve your public policy goals. If you know the rules, you can avoid the risks and the adverse publicity that may come along with violations. And of course, this is an area where asking first and planning in advance is key. If you review the rules and know them in advance, you can avoid the negative consequences. On the other hand, if you leap before you look, it may be not possible to avoid negative consequences. Next screen, please. I think it's also important to provide part of the tax overview before we go into depth here. On On the 501c, 501c4 and C6 side, the associations, the advocacy groups, and the professional societies, they're perfectly free under the Internal Revenue Code to engage in, to make political contributions and engage in political activity. But that cannot be their primary purpose. However, campaign finance laws at the federal or state level may prohibit some or all of that kind of conduct. These organizations, by and large, can sponsor a PAC, and they can engage in unlimited lobbying activity. I'll be addressing the campaign finance aspects for those organizations. On the other hand, for 501c3 organizations, they are prohibited from engaging in political activity, and Lisa will be talking about that. 501c3 organizations also are limited in the amount of lobbying that they can engage in, and there are a number of two different ways that can be measured. Kevin will be talking about that topic. All the political and lobbying activities by these organizations will be reported in their organization's annual IRS Form 990 informational return. The filling out that form is beyond the scope of our presentation today, but you should be aware that this activity is reported to the IRS. Okay, we can move on to the next slide and into the next slide again. So now we're going to be talking about not the tax rules, but the campaign finance rules that apply to your associations and advocacy groups. Again, under the tax laws, they're allowed to engage in this activity. So at the federal level, under federal campaign finance laws, which are enforced by the Federal Election Commission, or the FEC, as we call it, the any incorporated entity, association, or other nonprofit, are prohibited from making contributions to federal candidates, political parties, and PACs, political action committees. There is, we can call it an exception to that, that these organizations are allowed to sponsor independent candidate advocacy communications called independent expenditures, and we'll touch on them a little bit later on. Once you get to the state level, the laws are a bit all over the place. In 5 states, if you see on the screen in front of you, unlimited contributions from incorporated entities are permitted. In about 20 states, they're prohibited, just as they are prohibited at the federal level. And in other states, there are limits that are imposed on making political contributions. Next slide, please. So if you're operating at the federal level and you cannot make contributions with your corporate dollars, the answer is to have a federally registered political action committee called a PAC. If you're a membership organization, your PAC is called a separate segregated fund, which has special benefits. Now, the PAC does not spend corporate dollars, rather the PAC spends contributions from individuals who are in the restricted class, and I'll get into that in just a second as who's in the restricted class. And the PAC can do all the things that you cannot do with corporate dollars. The PAC can contribute to federal candidates and political committees. It can host fundraising events and pay for food, beverages, venue costs, all the things you want to do in supporting candidates. Now, one of the great benefits of this kind of PAC is that it can receive solicitation and administrative and financial support from the association or advocacy group and not have to use its precious PAC dollars for those administrative expenses. There is some ability to use a federal PAC in state elections. This is very much state by state. In some states, you can use the PAC and a federal PAC and it's easy. Others, there might be registration or reporting requirements. And in some states, it'll be impossible to use your federal PAC and it'll be necessary to establish an entirely separate state registered PAC. We can move to the next slide, please. I mentioned that the PAC gets its funding from the restricted class, and for membership organizations, the restricted class would be these folks. It would be the executive and administrative employees of the organization itself, meaning the folks who run the business of the association, its officers, executives, managers, members of the professions. It includes individual non-corporate members, if you have them, and for associations, it includes the restricted class of the association's corporate members provided that corporate member gives what's called prior approval for that solicitation. In addition, the immediate family members of all the folks that I've just mentioned are in the solicitable class. Next slide, please. If your organization is not a membership organization, you're very limited in what you're going to be able to do with respect to a PAC. Since you have a limited restricted class, essentially the folks who work for the organization. Normally what you do is be setting up a non-connected organization. Some individuals associated with the organization would establish a separate non-connected organization that has to be self-sustaining and can't receive solicitation and administrative support from the organization for those kinds of costs. However, I should point out it is relatively easy under the FEC rules to be able to have individuals the FEC considers to be members and to be able to establish a separate segregated fund. Okay, next slide, please. If you have a PAC and you're just starting, you should know there are two kinds of PACs. At the very early stages, a PAC is called a non-multi-candidate committee. If you receive contributions from fewer than 50 individuals and supported less than 5,000, that you're a non-multi-candidate PAC. And once you grow past that, you become a multi-candidate PAC. The contribution limits for a multi-candidate PAC are on the screen in front of you. And I won't go through each of them, but let me point out that the multi-candidate PAC can give contributions of $5,000 per candidate per election. And at the federal level, a primary and a general election are considered separate elections. So your PAC could give $10,000 to a candidate for Senate, for example, in an election cycle. Next slide, please. As I mentioned, at the early stage, the non-multi-candidate stage for a PAC, it has the same contribution limits as individuals. And so those contribution limits are on your screen. You'll notice some are by election, some are by year. And you can see the second one there. If you think about an individual, that individual, if it's in your restricted class, could give your PAC $5,000 per year. Several of these, which are starred, are readjusted every 2 years. Okay, next slide, please. If you have a PAC, there are many picky rules that go along with running the PAC. Let me mention just a few of particular concern to associations. If you have an association PAC, please keep in mind, you cannot solicit contributions from your corporate members' PACs. You can accept voluntary contributions that they make on their own, but you cannot ask them for contributions from their corporate PAC to your association PAC. On the other hand, there's some great benefits that association PACs have. Your members can donate funds over and above their dues to cover PAC administration and fundraising costs. If you're having PAC fundraising events where you have raffles and door prizes, they can provide those to you for those purposes. So your corporate members can be of great assistance in raising funds and growing the PAC. Next slide, please. If you don't have a PAC and you are interested in supporting candidates and having your team members support candidates, there's the ability to have the candidate appear before your restricted class. The costs of that event can be treated as a contribution or not treated as a contribution to the candidate. The candidate or his or her representative can solicit contributions at that event, and your organization can even suggest that your restricted class members contribute. However, your organization cannot collect the funds at all. Those funds must be collected by the candidate or his or her representative. The key on this particular rule is that only restricted class individuals can attend this type of event. Okay, next slide, please. Okay, I'd like to go into a few other contribution rules. These are not necessarily connected, but important individual rules you should keep in mind. Number one, you cannot do indirectly what you can't do directly. So conduit, straw donor contribution schemes are prohibited. Your organization cannot give one of your employees funds that they then use to make a contribution to a candidate. nor can you give an employee a bonus that is intended to be used to support a candidate. DOJ at the federal level, state prosecutors at the state level actively prosecute these kinds of schemes. Some are complicated, some are simple, all are illegal. Next slide, please. Also keep in mind, if your organization has members who are based overseas, that foreign nationals, whether individuals or entities, are absolutely prohibited from making contributions or expenditures in connection with any election in the United States, federal, state, or local. Only US citizens and lawful permanent residents are allowed to make contributions to candidates, political parties, and PACs. Not only that, but foreign nationals cannot direct or oversee US corporate contributions or manage or direct PAC activities. So if you have members who reside overseas, you're going to have to scrutinize their contributions very carefully to see if your PAC can accept contributions to them. If it's a US citizen abroad, fine. If it's a foreign national, you can't accept it, nor can the foreign nationals manage your organization's PAC. Next slide, please. The next concept I want to talk about is a very fancy FEC word called corporate facilitation, but the concept is pretty simple. At the federal level, not only are corporate contributions impermissible, but you also are prohibited from using corporate facilities or resources to assist in fundraising from individuals. So a vice president in your organization couldn't use overnight mailers and his assistant's time or your membership list to raise funds for his brother-in-law who's running for Congress, for example. The value of all those corporate resources, the overnight mailers, the time of the assistant, and the membership list, all of that becomes an in-kind contribution to the campaign, which would make it an illegal in-kind contribution. This is an area where the FEC is very active, and among its highest penalties, civil penalties have been in this area, and states tend not to use the term. They tend to just call it in-kind contributions, but it is an area where it is easy to misstep because the corporate support seems to be insignificant. There are some de minimis exceptions, and by and large, if an employee uses his or her corporate computer for personal political activities, that normally does not result in a violation. Next slide, please. Finally, let me say a few words about independent expenditures. These are the independent candidate advocacy communications I mentioned a bit earlier. Since 2010 and the Citizens United decision, corporations now are allowed to make sponsor and pay for these independent candidate advocacy communications. But they must be they must be independent. They cannot be coordinated with a candidate or a political party. What we've seen over a 14-year period is that most independent expenditures are made through nonprofits, trade associations, 501c4 organizations, and super PACs, one kind of an FEC regulated PAC. Next slide, please. The big issue in this area is disclosure. Certainly, the sponsor of the independent expenditure communication is going to have to file reports reflecting the funds they have expended. The issue that is most important is, when do those organizations have to disclose their donors, the funds that they receive to make those independent expenditures? And here, the federal and state rules can vary greatly. Generally speaking, at the federal level, if the donor knows funds are going to be used for political purposes, they have to be disclosed. The state rules can be very passive or can be very aggressive, and many states are having very aggressive rules. Arizona, for example, last year passed a new law requiring the donor of original money and the intermediary to be disclosed in their independent expenditure reporting regime. The final point I want to make in this area, so we get questions a lot, it's about super PACs. And as I said, that's a form of PAC filed with the, registered with the Federal Election Commission, specifically for the purposes of making independent expenditures. It can be funded with corporate money, and individual money in unlimited amounts. But these are not secret PACs. The money that goes in is fully disclosed. There are other vehicles people try to use for to hiding money, but super PACs have all their donations disclosed. So with that, that will conclude my section of the presentation today. So now I'm going to turn it over to Lisa to talk about the IRS rules for 501c3 organizations. Lisa.
Thank you, Jim. Yes, next slide, please. I'm going to be talking about the IRS rules for 501c3s. So charitable organizations, including houses of worship that receive a tax exemption under section 501c3 of the Internal Revenue Code, are prohibited from participating in or intervening in, including the publishing of or distributing of statements, any political campaign on behalf of or in opposition to any candidate for public office. Next slide, please. So the prohibited activities include making or soliciting contributions for, on behalf of, or against any candidate for public office or to a political party, endorsing or opposing a candidate for public office or political party, employees using organization resources in support of or opposition to a candidate for public office, providing funds to a 501c4 organization without controls to ensure that those funds are used solely for 501c3 exempt activities and not for political activity. And just to note that social media activities of an individual are attributable to an organization when those activities are conducted during the person's work hours and/or state or imply that they're being made on behalf of an organization. Next slide, please. The IRS has said with respect to organization leaders of 501c3 organizations, the political campaign intervention prohibition is not intended to restrict free expression on political matters by leaders of organizations speaking for themselves as individuals, nor are leaders prohibited from speaking about important issues on public policy. However, for the organizations to remain tax exempt under section 501c3, leaders cannot make partisan comments in official organization publications or at official functions of the organization. And that would include organization meetings and such. Next slide, please. Individual activity by organization leaders that is permitted are endorsements, again, that are made in an individual or personal capacity, making clear that it's not on behalf of an organization. Again, no organization resources may be used. The organization cannot pay for costs. And the activity that's held may not be at an organization event or in an organization publication. I would also add to that that non-501c3s also should not have on their website a link to a political candidate, for instance, a web link. Next slide, please. Permitted election year activity for 501c3s, certain nonpartisan election year activities are permitted. So you may say, well, what is permitted and what is political? Well, the IRS will apply a facts and circumstances test to determine what it considers political. It has provided 21 factual scenarios that it's analyzed, and multiple factors are considered in each scenario. So it gives 501c3s some guidance and some ideas, although it's not going to have every fact pattern, and we know that every situation is going to be unique, or could be unique. Next slide, please. So the kinds of permitted election year activity are things like nonpartisan voter education, get out the vote drives, voter registration, where there is no reference to a particular candidate or party, and where there is not encouragement of support for one candidate over another. With respect to candidate appearances and forums and debates, those are permissible where there's equal opportunity for candidates, where no support is being expressed for a particular candidate, where there's no fundraising, and no favoritism in the conduct of the event. Next slide, please. So is the conduct, is the Political campaign intervention is the conduct, does it constitute prohibited political campaign intervention by a Section 501c3? As I mentioned, the IRS has provided 21 different fact scenarios, and I'm going to just go through a few of those to give you a sense of what the IRS says is prohibited versus permitted. Mayor G attends a concert performed by Symphony S, a 501c3. In City Park, the concert is free and open to the public. The mayor is a candidate for re-election, and the concert takes place after the primary but before the general election. During the concert, chairman of the board of trustees of the 501c3 says, "I'm pleased to see the mayor here tonight. Without his support, these free concerts would not be possible. We will need his help if we want the concerts to continue next year. So please support Mayor G in November as he's supported us." Next slide, please. So has Symphony S engaged in impermissible political campaign intervention? Yes. And some of the factors to consider are, is the forum being operated in a manner that would show bias or preference for a particular candidate? Does the event have biased questioning procedures that favor a candidate? And if so, that would violate the law. And clearly in that situation, the chair of the board of trustees is endorsing the mayor for re-election. Next slide, please. President A, CEO of a hospital that's a 501c3, is well known in the community. With the permission of 5 prominent healthcare industry leaders, including President A, all of whom have personally endorsed candidate T. Candidate T publishes a full-page ad in the local newspaper listing the 5 leaders by name. President A is identified in the ad as CEO of Hospital J. The ad has a disclaimer that says titles and affiliations of each individual are provided for identification purposes only. The ad is paid for by candidate T's campaign committee. Because the ad was not paid for by the hospital, the ad is not otherwise an official publication of the hospital, and the endorsement is made by President A in his personal capacity. The ad does not constitute impermissible campaign intervention by Hospital J. Next slide, please. Chairman D is chairman of the board of M, a Section 501c3 organization that educates the public on conservation issues. During a regular meeting of M, shortly before the election, Chairman D spoke on several issues, including the importance of voting in the upcoming election, and concluded by stating, "It's important that you all do your duty in the election and vote for candidate W." Because Chairman D's remarks indicating support for candidate W were made during an official organization meeting, they do constitute impermissible political campaign intervention by M. Next slide, please. So as you may know, potential consequences for violations of the IRS's prohibitions could result in denial or revocation of tax-exempt status, loss of exemption from state income sales and use taxes, and enforcement or regulatory action by a state's attorney general, and of course, negative publicity as well. Next slide, please. So now I'm going to switch to more generally employment law considerations for nonprofits, and this extends beyond just 501c3s to all kinds of nonprofits. Next slide, please. So as a general matter, generally, there is no First Amendment right to free speech for employees in the private sector workplace. And I say generally because there is at least one state, Connecticut, which does extend First Amendment protections. But generally speaking, there's no First Amendment right to free speech in the private sector workplace. But there are other laws that do bear on an employee's speech in the workplace at a nonprofit organization and in the private sector generally. And most private sector employers are covered by a federal law called the National Labor Relations Act. And that law gives non-supervisory employees, both union and non-union, the right to engage in concerted activity for mutual aid and protection. And what that means is when 2 or more employees join together to complain about working conditions, and working conditions could be discussions about wages, compensation, health and safety issues, generally any kind of working conditions, they have the right to speak out on those issues, and they have the right to form a union. And another provision of that law, Section 8, says that employers may not interfere with employees' Section 7 rights. It's considered an unfair labor practice where the employer interferes. So employers in the private sector workplace may not prohibit employee conversations relating to working conditions under the National Labor Relations Act, even if those conversations may involve a discussion of legislation affecting working conditions, current events that impact where they're talking about working conditions, politics, candidates' positions on work-related matters. So the question for the organization is the employee speech related to working conditions, or is it truly political speech? Next slide, please. There are also federal, state, and sometimes in certain jurisdictions, local anti-discrimination laws that prohibit discrimination against employees on the basis of certain legally protected categories. One of the most well-known laws in that regard, a federal law, is Title VII of the Civil Rights Act of 1964 as amended, prohibits employment discrimination on the basis of race, color, sex, national origin, and religion. And how this comes into play with respect to employee speech is that discussions about politics in the workplace can touch on legally protected categories. Employees talking about candidates, the conversation can easily drift into derogatory remarks about a person or a group's legally protected category. And so employers need to be alert to those possibilities. Additionally, where an employer has a dress code policy, if they selectively enforce that policy, that may also result potentially in discrimination claims. If an employer has a policy that says no t-shirts, but they don't enforce that rule when there are t-shirts that have certain slogans or language, but they do enforce it when there's other writings on the t-shirts. That could be depending on what the t-shirt says and the person wearing it. That could end up in a situation where the employee who is disciplined for wearing the t-shirt that has a particular slogan says, this was done, you're disciplining me because of a legally protected category that I'm in. So employers need to be mindful about being consistent in the enforcement of policies, including their dress code policies. Next slide, please. In addition, there are state laws on off-duty conduct. So there are states that prohibit discrimination against employees for political activity or affiliation. They prohibit discrimination against employees for their legal recreational activities. And there are some states that now have laws, New York is one of them, prohibiting employers from requiring employees to attend employer-sponsored political meetings. Actually, it's political or religious meetings where the employer is they're also called captive audience meetings, where the employer is requiring employees to attend meetings where the employer is expressing their views on political or religious matters. Next slide, please. Oh, wait, so let me just finish up by saying quickly before I turn it over to Kevin, is employers can have policies, dress code policies, conflict of interest policies, code of conduct policies that set out what the employer's expectations are, but that doesn't mean necessarily that there's not going to be litigation. And there are a couple of cases right now in New York, which has an off-duty conduct law where an employee of a nonprofit reposted reposted something on Twitter and was fired, and is now alleging both religious discrimination and a violation of New York's off-duty conduct law as a result of that. So we can talk more about, what employers can do versus what they should do as well. So you always want to consult with counsel before you make a decision about how you're going to handle a particular situation in this regard. And with that, I now turn the program over to Kevin to talk about lobbying.
Thanks so much, Lisa, and great coverage of the employment issues. I'm Kevin Serafino. I'm an attorney in Whiteford's Washington, D.C. office, and I'm here today to talk about lobbying issues. So Jim was going over some of the tax and campaign finance issues and how those intersect. That's support of candidates. What I'm talking about here is the intersection of tax and rules regarding advocacy for legislation, for public policy, for regulation. And so it's important to understand the difference between the support for candidates and support for policy. So right now we're in the policy segment of this. And really we're going to be talking about the restrictions on 501c3 organizations. Like Jim mentioned, C4s and C6s have far fewer restrictions. They can lobby in unlimited amounts as long as that lobbying is consistent with their exempt purpose. For C3s, it's helpful to go back into the statute a little bit. And I know that nothing makes people's eyes glaze over more than looking at tax law, but this is a really important segment for anyone who's working for a 501c3 organization, is to know this specific segment, which is that no substantial part of the activities of a 501c3 can be dedicated to carrying on propaganda or otherwise attempting to influence legislation. And we're going to get into what that means and getting into a little more detail about those terms of art throughout this presentation. Next slide, please. As I mentioned, 501c4s and C6s do not have that same restriction. You see a couple of other excerpts here. These may describe your organizations, and you'll note that it does not have that prohibition on propaganda and influencing legislative activities. So we're going to be steering clear of those today. If you have questions about specifics about a C4 or a C6, again, that's something we're happy to address later on, but not covered right here. Next slide, please. So again, like I talked about, this is really about the overlap between tax rules and lobbying rules. There are two separate ways that the federal law restricts legislative activities like this: the Internal Revenue Code, that's all the tax laws, and the Lobbying Disclosure Act, which we'll get to a little bit more later. The Revenue Code is really concerned with legislative advocacy. So, talking about bills and things that are going through a legislative body. It could be that voter referenda are considered legislative actions because in those circumstances, the citizens are kind of acting as legislators. But it's really not concerned with regulatory advocacy, executive agencies at the federal level. And that's a big part of what folks in Washington are working on, because federal agencies make a lot of enforceable binding law and set rules that a lot of industries and other organizations need to abide by. The tax code is not concerned with that. It's also important to know that the ways that lobbying is measured can differ for C3s versus their C4 and C6 counterparts. We'll get to that a little bit more in a moment. But the key takeaway is that for C3s, lobbying is not an exempt purpose. It is not something that can be conducted as a part of an organization's charitable education activities in a substantial amount. And the substantial part test is really what we're going to be talking about on these next few slides. Next, please. So there's a common misconception that 501c3 organizations are not allowed to lobby. That is not the case. 501c3 organizations can lobby, but they have to limit the amount of lobbying that they do. As you saw before, lobbying cannot be a substantial part of the organization's activities. And the consequences can be pretty severe. There can be penalties, tax penalties imposed on the organizations that can vary it can be 25% of excess lobbying done under one of those measurements. There can also be penalties on the managers, the individuals who are operating the organizations. So that's something that executives need to be aware of. They need to have visibility into the kinds of activities that are going on, because they may be individually liable under the tax code. And finally, one of the most severe penalties is that a C3 can lose its tax exempt status. That means that it may have to pay taxes on its revenues. Donors to the organizations won't be able to deduct their contributions from individual taxes anymore, and that can really be a penalty that can be a death sentence for a lot of organizations. That tax status is so key to what they do that this is really something to be aware of. These situations are not common, but again, if executives do not have visibility into these kinds of activities, it can feel like it comes out of nowhere, and it's a very severe penalty. Next slide. So getting back into that substantial part analysis, really have to understand how we measure lobbying activity. And substantial part analysis really gets separated into two different tests. And as an organization, you can choose how you are going to measure your lobbying activity. Next slide. So just to start off with, it's helpful to get back into the code for 1 second. So here we see no substantial part of the activities can be dedicated to influencing legislation, except as otherwise provided in subsection H. What does that mean? Next slide, please. We're looking on the right-hand side of this slide. It means that there is a separate way to measure your lobbying activity, and that's commonly referred to as the 501H election. So if you ever hear saying from your in-house accountant that you're taking the election, this is what this means. 501c3 organizations can affirmatively elect to be measured under a clear, bright line standard of how much they are allowed to do in terms of lobbying expenditures. It's called the expenditure test because it is measuring how much the organization is spending on its lobbying activities in proportion to all of its exempt purpose expenditures. So it does give a lot of clarity. It's a bright line test, and it also gives you a very clear penalty. Like you see at the bottom, 25% of the excess of your limit can be taxable. The other test that can be used to determine whether there's no substantial part, it's called the facts and circumstances test. And if you do not affirmatively elect to have the 501H election using the IRS form 5768, then you are by default using the facts and circumstances test. And this really considers the organization's activity as a portion of all of its activities. It's not based on just the money you spend. It also includes all the things you do. And that can be activities by staff, by your board, by volunteers. It looks at the kind of programs you operate. It looks at the kind of communications you're putting out into the world. It can provide some additional flexibility because it does not have the hard cap on expenditures that the 501H election test does, but it also provides an organization with a lot less certainty. Whereas the 501H election, it provides you a hard cap and you know that you cannot go above it. There's also a common misconception out there that 5% of activities is dedicated to lobbying is okay for 501c3s. Again, that's another common misconception. It's based on a very old Supreme Court case called Seasongood versus Commissioner. It's almost 70 years old. And in that case, a specific organization was deemed to not have engaged in a substantial amount of lobbying when it had about 5% of its activities dedicated to lobbying. Some groups have taken that to mean, oh, I can do 5% of my activities dedicated to lobbying, and that's fine. I would really encourage people to not take that away from this case. It's very old. It applies to a very specific and very narrow set of circumstances, and it's a misconception we see with a lot of our C3 clients. Next slide. So, like I mentioned, the 501H election does have a hard cap on what you include, or hard cap on what you're allowed to expend for your lobbying. And it's all dependent on how much your organization spends on all of its exempt purpose activities. So if you look on the left-hand side, you look at this is going to be the side where you determine how much your organization spends. And on the right-hand side, it tells you how much you can spend on its expenditures for lobbying. So the maximum under this test is $1 million, but that's only if your organization spends more than $17 million in exempt purpose expenditures. So it is a bit of a sliding scale, but based on this table, you can estimate what your the limit for lobbying expenditures is going to be under that test. Next slide. So what gets included? What do we, when we're talking about the expenditures, what gets put into that calculation? So it's going to be based on what you spend for lobbying communications that are intended to influence specific legislation. So specific legislation can be bills and acts before a legislative body, US Congress, state and local legislative bodies as well. Like I said before, it can also include ballot referenda. And it's important to note that administrative agencies are not considered legislative bodies. So we're still here on the tax code. We're only talking about legislation. But it can also include both direct lobbying, where you or your organization is communicating directly with lawmakers and policymakers. It can also include asking your members or asking your stakeholders to engage as well. It's called grassroots lobbying. And we'll talk about that distinction on the next slide. Next, please. So direct lobbying, like I said, you have to refer to a specific piece of legislation and express a view on that legislation. If those activities meet those standards, you should consider it part of direct lobbying and put any expenditures for that activity into your calculation. Grassroots lobbying, on the other hand, refers to a specific piece of legislation, reflects a view on that legislation, and includes a call to action. So for example, if you're sending an email to all your stakeholders saying, HR 1 has been introduced in the House, call your congressman and tell them that you oppose this bill. That is an example of a call to action that would make this kind of communication included under grassroots lobbying and gets rolled into your calculation for the 501H election. Next slide, please. Other things that might be included, the costs of preparing and distributing communications, whether it's email platforms, whether it's research expenses, mailing, some related overhead for the staff or services that are helping you distribute those communications. Those are the kinds of expenditures that need to be included. But there are some exemptions, and there are some pretty big exemptions. For nonpartisan analysis, study, and research, examinations of broad social, economic, and similar issues that does not reference specific legislation. Requests for technical advice or assistance. For example, if a congressional committee knows that your organization has a specialty in transportation and they ask you for technical advice on policy they're working on, that can be excluded from lobbying. Also, self-defense communications. If you're responding to, for example, a media report, that communication in response to it can be excluded from your lobbying expenditures. Next slide. So finally, the big question for a lot of organizations is, should we take the 501H election and elect to be measured under this bright line? It's a tough question to answer for a lot of organizations because it's going to depend on the specifics of your organization, what kind of activities you engage in, your programs, what kind of budget you operate with, what kind of personnel you have dedicated to compliance or accounting and operations. Those things are very important for measuring your lobbying activity. So if you don't have the support systems and the infrastructure in place to really accurately track things and make those determinations, that could impact whether you take the election. Larger organizations may benefit from the flexibility of the facts and circumstances test. It can allow them to exceed $1 million in expenditures as long as it's not substantial under the facts and circumstances. So for slightly larger organizations that have more than $17 million in exempt purpose expenditures, that's something to consider because it can give you additional flexibility. But another benefit of the 501H election is that there are no personal tax penalties on managers. So again, it's a bit more of a safe harbor. There are a lot of things to weigh when considering whether to take the 501H election. So something you should certainly discuss with your tax advisors and with your legal counsel. Next slide, please. So now we're going to shift gears for just a minute. Want to leave some time for questions. So I'm briefly going to talk about lobbying disclosure, particularly at the federal level. Previously, we've been talking about tax rules. Now we're going to get into LDA land, which is a different set of circumstances. And this will apply for C3s, C4s, and C6 organizations. Next slide. So under the federal level, at the federal level, the Lobbying Disclosure Act requires the registration and reporting of lobbyists and entities, and it covers lobbying done for Congress and the executive branch. However, unlike the tax code, it does not cover grassroots lobbying, and there are different definitions for what is considered lobbying. So again, we have two different sources of law, and there is some overlap, but there are some important places where they diverge. We're not going to hit on all of those differences today, but it's something you should be aware of if you're involved in legislative advocacy. Also, what we're not going to get into right now are all the different requirements at the state level. All this have different requirements for what is considered lobbying, when registration is required, what are the fees, what needs to be reported. All of the states are different. It can be a very complex analysis, but the key takeaway is that you should look at them before you start lobbying. because in some states you're required to register before taking any activity that could be considered a registrable activity. So again, something to be aware of if you're involved in state legislative activity. Next slide. So under the Lobbying Disclosure Act, the definition of a lobbyist is really key, because if you don't have a lobbyist, you don't have to register. A lobbyist is someone that spends 20% or more of their time for the organization on lobbying activities in a 3-month period and makes 2 or more lobbying contacts. And really, lobbying contacts could be reaching out to congressional staffers. It could be outreach to political appointees at the executive level. So those, it can be very broad. So you need to be, lobbyists need to make sure they're tracking both their time and their contacts. The registration threshold is also, if you have a lobbyist, is if you are spending $14,000 or more in lobbying expenses in a calendar quarter. So again, you need to be tracking your activities and your expenses. If you are registering to lobby, there are 2 reports that you'll have to file regularly. One is a quarterly issues report called the LD2 that covers both your aggregated lobbying expenses and the issues you lobby on. The second report is only semi-annual, so it's twice a year, and both lobbyists and organizations have to report contributions to federal candidates and also to other organizations that might support federal office holders or be established, financed, maintained, or controlled by those office holders. So there's an issue and expense report, and there's a contribution report, and those are both things that are required to be reported to Congress. If you're going to be doing these reports, you have to have a reasonable system for computing your expenses. The law doesn't tell you exactly what you have to do. It could be as simple as maintaining a spreadsheet. It could be reviewing your calendar to see what meetings you took with Capitol Hill staff in a given month. But you have to have an established system for collecting and reporting that information. It's also important to note that there are strict limits on gift giving by federally registered lobbyists and their employers. So you need to certify your compliance with those gift rules whenever you file reports. Next slide. And just my last slide here, talking about how expenses are calculated. And this is different from the tax code regulations. There are LDA definitions that any organization can use, where most federal legislative activity is reported and only some federal regulatory activity is included. There's also reporting methods where you can use different segments of the tax code. One of them here, method B, is only for 501c3 organizations that take the 501h election. Then the last one, method C, is for C4 and C6 organizations under section 162 of the tax code, which deals with business expenses. So there are a few different ways that you can structure your reporting, and that's something you should talk about with your tax advisors and legal counsel. But the law does give some flexibility for organizations in deciding how they report their expenditures. And that's all I have on my segment. We are going to go to some key takeaways from this whole presentation, so I'll pitch it back to you, Jim.
Okay, I'm back on screen, I think. Okay, we do have some takeaways here, and Lisa, why don't you take the first 2 here, and we'll work our way down.
Sure. So along the lines of what I was mentioning before, it's important that you have policies that address the conduct that you expect in the workplace. Beyond standards of employee conduct, you may want to consider what your dress code policy is. Definitely having a policy regarding what prohibited partisan political activity, what's permitted and what type of conduct is prohibited. Like, for instance, the use of organization resources, letting employees know that they can't use organization resources and what kinds of things you're talking about there. If they drive a vehicle for work, right, then there's not a political slogan on the bumper sticker. They're not using the letterhead. They're not using organization logos, but you have a policy that addresses that. And then your policies are also applied in a consistent and nonpartisan way. Another key thing to consider is training your key employees, your managers, volunteers and board members about the rules and laws regarding prohibited political campaign intervention, not using organization resources. So training them, especially if those activities can trigger violations or reporting obligations. And I just would add, be mindful of what I said about union speech, about employees speaking out about working conditions, that those things are permissible. So your managers should know about what employer obligations are under the National Labor Relations Act, what employer obligations are under anti-discrimination laws, and how those employer obligations may factor into an election year, how those things may factor into political discussions, and how those political discussions could veer off the rails into potential violations of your anti-discrimination, anti-harassment policies. So you really, a way to help mitigate risk is to train those managers on those kinds of things. So with that, I turn it over to Jim on the next.
Kevin, why don't you take the next two here?
Okay.
Sure. One of the other takeaways I addressed right at the end of my slides, which is having a system for tracking all the information that you need to report for lobbying purposes under the IRC, the Revenue Code, and under the Lobbying Disclosure Act. That could be something as simple as a spreadsheet, or if you have a larger, more complex organization, there are various software products out there. Your HR and payroll software may have some kind of function that allows you to do that, but there are a lot of different options out there for nonprofits. And also, periodically review what you're doing, what your staff are doing, what your volunteers are doing. Are they advocating for legislation or supporting candidates? If you don't have the visibility into your programs, you won't know what compliance steps you need to take. So particularly for executives, it's a good idea to have a good handle on what your lower level folks are doing on Capitol Hill with federal agencies, and making a plan ahead of time to report these things before you run into compliance problems. So I think, Jim, the last two are yours.
I think so, that's right. And finally, this one is a bit repetitious, and I mentioned this at the beginning. Plan in advance. Make sure before you and your staff and your volunteers act, make sure you know the campaign finance rules, the lobbying rules, the tax restrictions. Know your limits, know your options, will guide you in a safe manner. And finally, put someone in charge. Your employees, your volunteers, all the folks should know who they can go to with compliance questions they have regarding their personal activities that may impinge on the workplace or your organization's activities. They should have somebody that's known, that's published within the organization that they can go to. And not that that person needs to be the expert, but that person can at least get the information and can be the central point for any questions about activity. They'll go a long way to keeping you safe in this regard. Before we sign off, we do have a couple of questions that came in, and I'm going to read this one. I'm going to direct to Lisa. The question is, what if an employee has a political picture or symbol hanging on the wall in their home and it's visible over webcam meetings? Is it prohibited? And I guess can it be regulated? I guess the same thing goes for buttons and things like that. The last part was my editorialization, but maybe you can address that.
Yeah, so that's a good question. So now that we are, many meetings are held remotely from people's homes, that is their workplace now. And so for the times that they're in meetings, that's their workplace. And employers' policies would in fact extend to the workplace, and that is the workplace. So your question about whether it's prohibited, it's really it's going to depend on what the employer's policy says about what employees are permitted to say in the workplace, because employers can regulate, as I mentioned, can regulate speech in the workplace. There's no First Amendment protection in the private sector, for the most part, in most jurisdictions, and except for, as I mentioned, union union statements. So when Jim referenced, what about pins or buttons in the workplace? Well, if it's a pin or button that is a union pin or button, or it's about working conditions, then employer needs to be careful that they're not running afoul of the National Labor Relations Act. If it's outside of that, but it's the workplace, the employer can generally regulate employee speech, and so they will want to have policies that address that.
There's another one that I think we have time just for two more quick ones here. There's another one came in. I'm going to direct this one to Kevin. It's my organization doesn't lobby. We only educate policies on various topics. From what you're saying, it sounds like this needs to be included in our measurement of lobbying. Can you explain? And I'll add on to that, Kevin. Is educating and lobbying, are those two separate things?
I'm glad this one came in. This is a question we get all the time, and it gets back to the difference between lobbying under the tax code and lobbying under lobbying disclosure laws. So under the tax code, you can kind of go back to that graphic that I had. We don't need to rewind, but for when you're watching this, looking at the slides later, look at the difference between actions that reference specific legislation and express a view on that legislation. That can be lobbying under the tax code. But what a lot of folks don't consider is whether it could be lobbying under the Lobbying Disclosure Act. The Lobbying Disclosure Act does not make a distinction between communications that specifically advocate for a piece of legislation and ones that don't. The LDA makes no distinction between advocacy and education. So a lot of what C3 organizations think is education, it may not be reportable under the tax code, but you may have to report it under the Lobbying Disclosure Act. So again, the LDA does not make that kind of distinction. So it's something you need to be very careful about and not presume that because you're a C3 doing this educational work, that you're exempt from registering under the LDA. Some registration and reporting is done by plenty of reputable C3s, so it's something you should consider, and knowing the difference between those definitions under the tax code and the LDA.
I'll ask myself the last question that came in, and I think that that'll wrap it up for us today, and that is, what is the line where issue advocacy becomes partisan political activity? And we get this question a lot too, and unfortunately the answer depends upon which laws you're looking at. If you're looking at the tax laws, we're back to those multi-factor analyses that Lisa was talking about to try to figure out, okay, is this political speech, political activity? Is it issue advocacy? And it's very much case by case. When you look at the Federal Election Commission and their laws and rules, it's more of a bright line test. It really has to be express advocacy of candidates and parties in order to be regulated. And the difference being because of the functions of each organization. On the IRS side, it's about tax deductibility and tax exemption. On the FEC side, it might be about prohibiting speech or fining speech. So there are more First Amendment implications there. But oftentimes you have to figure out either or both in any given situation, and they can lead to different conclusions. And I think that's it. We're at the end of our time. If we could just go to the next slide. Our contact information is there. We greatly appreciate you joining us here today. If you go to our website, we have alerts and newsletters on all the issues we've been talking about today. Thanks very much, and thank you for joining us.